Thank you very much, Kevin. Good afternoon, everybody. Well, first of all, really delighted to be here and pleasure to talk to you about the fuel-EU regulation on the Marine Money Conference, and would like to thank Kevin and Mia and the organizers for putting an amazing event. And just reflecting, it's always awesome to be on these sort of events where I also get to meet many of my good friends and colleagues and always exchange some good ideas. So today, I'll talk about the fuel-EU as basically one of these flagship regulations that has kicked off on 1st of January this year, and what sort of profound effect it will have on the operational costs for the vessels trading in Europe and in and out of Europe, and what sort of knock-on effects this will have on basically the ship designs and then the behaviors of the fleets and vessels impacted by this regulation. So for those who are not familiar about this regulation, basically this has been adopted as the Fit for 55 package within Europe, and then the ultimate target is 80% reduction by 2050. And now this is not theoretical anymore, not in discussion. It has been implemented. So the vessels who are calling the EU ports will have to basically either comply for their emissions, and their fuel consumptions throughout the year, or will have to pay some very hefty penalties. And it is basically getting, progressively worse. And I think there is a whole lot of complexity in the regulation, not basically in the targets and how it's how this is structured, because I think it's very clear. It's every 5 years you have this progressive decrease, but the complexity comes in basically how do you comply, because there are a vast amount of options, more or less theoretical options, how you comply. With green fuels, some of the energy efficiency measures, wind and so on, and then flexibility mechanisms. But I think we also need to look at as one of the earlier panelists mentioned, positive business cases for this, particularly for the green fuels, as we know, there are lack of those, and even if they're available, they are coming at cost. So. Another background to the fuel-EU regulation is, comparing to the ETS, the fuel-EU covers the whole spectrum of the emissions from well to wake. So how the fuel is produced, and basically for these, low carbon fuels, such as biofuels, it matters how the feedstocks are collected, processed, what's the energy intensity of that fuel production process, and then finally, their transportation, and on tank to wake propulsion, how what's their intensity of being consumed on a vessel. That means, your engine selection matters, your methane slip matters, pilot fuel matters, and you would see then based on the production and based on their consumption on a vessel, on the bottom, chart, you could see the different levels of their intensity. So they really come at, expense of the emissions depending on these factors. And what's most importantly for Europe is that they might be produced in a sustainable way, but if they don't have the compliance certificate, basically a proof of sustainability certificate, the European Commission will not recognize those, and it would be considered as like non-compliant fuels. So I think it matters, that when the owners, operators, or the charters in the case, when they go through the fuel procurement process, that they basically go and cover the whole, full extent of the chain, including the proof of sustainability certificates. Now, this is to draw the example on the different LNG options, and how would different LNG and different LNG basically molecules, so the fossil and biomolecules, with the different methane slip levels basically affect the compliance, and when would they go out of compliance. So this is to basically draw the attention on the methane slip to the compliance and the emissions. So for those who are not familiar with the methane slip, this is the unburned molecule which is escaping the combustion chamber, and it is penalized basically 25 to 28 times greater to the CO2, as it has a bigger global warming potential. Now, there are various discussions now in the European Commission whether there is going to be a factor of AR4, a factor of 25 applied or 28. I think either of these are quite heavy. So I think the ship owners would really have to think about the level of the methane slip before selecting their dual fuel engines. Now, how this matters? Well, if you're operating a fossil LNG with a high methane slip, so some of the cruise liners, for example, have the dual fuel diesel electric ships with 4-stroke engines, 3.1 high methane slip, they're basically out of compliance. They're non-compliant as of the 1st of January. And they'll have to pay the penalties unless they find a way to offset those by consuming the bio-LNG molecules, for example, as it is the case further down. Now, if you could see then the second chart, it shows the same molecule, but working in a different LNG dual fuel platform. So the high pressure MEGI engines with low methane slip. It basically you can extend your compliant life by another 15 years by simply smart selection of the engine and the engine platform. And this is not the full extent, of course, of the fuel options. I think the LNG is relevant as of today because if you look at the order book, the vast majority of the alternative fuels on order are dual fuel LNG, and there are some, of course, other options, methanol ready, methanol capable, and so on. But I think this is quite relevant for today's market. And then further down the line, of course, you've got bio-LNG options, so you would able to offset some of these emissions created, through the tank-to-wake by combusting the molecule. With bio-LNG, you would offset these emissions and stay compliant in the production process by assuming basically these emissions were taken out in, for example, anaerobic digestion process. And then, of course, the best option, if you have the access to the biomolecules and you do have the right, LNG technology platform with the low methane slip, you are pretty much, compliant up until 2050, where your vessel goes out of compliance. Now, I think this is not only to say that basically the vessels operating on LNG will not have to pay the penalties. There is also a reward to be, picked up by some of these compliant options, even beyond LNG, for the owners and operators having access to the green fuels, which is basically coming in a form of the surplus values. So these green bars below, those are the surplus values, which basically could be collected and pocketed, banked for later in the transition period, where they could be then either traded onto the market, or they could be just used in a pool of vessels, or for that vessel later in the period. So they do not expire, which is quite interesting. Now, some risks are of course coming with this. Particularly, I think we're looking at the LNG options here in this graph. So I want to say, there is a risk of fossil LNG lock-in, and there are different, industry working groups and industry, I think some large companies as well advocating for this not being really the end solution. So just wanted to mention that. Then the second option for basically softening the penalties, not fully complying, not providing like a full compliance, but softening some of the penalties, is adopting the technologies, the wind technologies, in particular, because those are provisioned in the fuel year regulations with different levels of savings. They come with different levels of savings, which would then guarantee you different levels of discount under for your penalties. So for the vessel here operating on a VLSFO, which is out of compliance as of today, if it would have a wind propulsion fitted, you could extend that compliance for another 5 years, make some of these fuel savings right away, even bank some of these surplus values and sell. So there is a business case basically for installing these devices. And we could see, quite a few of these being tested and trialed at the moment, and we see a good uptake, across the segments. I think the exception only being probably the LNG carriers, because it's difficult to feed them on the open deck. But also to illustrate some of the potentials for that, if you would fit a wind propulsion, wind-assisted propulsion, like a flattened rotors today, the award that you could get out of it between 25 and 2030 is 72 euros per ton of your fuel consumed on a vessel. So this is just to say, I think how we think about the ship designs, and for a long time, I think these energy efficient devices were considered as nice to have, and like something coming out of the R&D, and not really kind of going into the mainstream. But I think now we're seeing a greater uptake of wind, greater uptake of the air lubrication technologies as well, and I think more owners, operators, and charters as well, putting that on their standard specs and orders, which I think only makes sense, because it would not only reduce your fuel bill, but it would dampen your emission penalties as well. So now the business case is looking much more positive, basically, and it drops below that traditional 5 years payback time. So now I think it makes more sense to do it. Another option, which is kind of an obvious option for compliance, is of course blending. But first, to illustrate, before you go into the blending phase, what's the extent of the FuelEU penalties that the vessels would be facing. So on the left-hand chart, you could see the emission costs of the handy-sized vessel trading in Europe. And whilst, the EU ETS is pretty much like, of course, it is dependent on the EUA price. And, here is just an assumption that this price does not fluctuate. But to give you to illustrate the extent of the FuelEU becomes drastic, really, from, somewhat 2035 and 2040s onwards. And I think, whereas, the FuelEU penalties will reach about 2.5 million euros level in 2050. There is another hidden cost in there if you're keeping your vessels non-compliant, which is the non-compliant multiplier. So every year that you're non-compliant, for the first year non-compliance, you pay 1.0 times your FuelEU tax. If you're non-compliant the next year, you'll pay 10% more on your FuelEU bill. The next year, if you're still non-compliant, 20% more, 30% more. So this basically accumulates in 2050. If you're non-compliant, say you have your MR tanker entering the service today, non-compliant, VLSFO operating, and you're non-compliant up until 2050. In 2050, you'll have to pay 3 times as much. Your non-compliance factor would be 3 times as much as the taxes you would pay otherwise. So I think it really, what the FuelEU does is really want to, shift the behavior from, pay to comply to really like find the ways to comply, which means basically find a way to reduce your energy demand. So have the inherently efficient vessels, and then have some of the blending or the fuel strategy at hand. So on the right chart, what you could see is the blending amounts of the biofuel, B100 in this case, which is required for compliance. So I know when we talk about the biofuels in particular, I think the key challenge here is the supply, and particularly the competition from other sectors for the underlying, feedstock. So this is to illustrate basically that, yes, even though there is not enough, supply in the market, the demand also is at the beginning, at least, not going to be huge. You only need like 3% in the first, 5 years to comply. But we still do see the fundamentally this market being undersupplied. And now, what does this mean in the broader sense of the economics? Well, in the EU, if you look at, about 12,000 vessels operate within EU and in and out of EU. Out of these 12,000 vessels, they mostly consume basically VLSFO, HFO scrubbers, VLSFO, MGO, a little bit of LNG. So most of these are non-compliant vessels that will have to pay the penalty. And what's the size of the prize for, the European Commission? It is about 1.4 to 1.7 billion, which they do promise to recirculate back and try to support these fuel producers for low carbon fuels. We'll see. We'll see. There are still no details how these funds will be recirculated back into the market, but we'll surely would like to see something like that happening, similar to what the IMO has promised as well. And then, if you look at the fleet level. So on the right-hand side, this chart shows a fleet of the MR tankers operating on a transatlantic route. And this is a comparison of 4 different fuel options. So, and we're comparing the fuel costs and the emission costs. So, of course, the biggest chunk of the operating costs, generally about 50% is the fuel. And here, the biggest chunk, the green one, is our fuel costs. But the gray one, the fuel EU, I think it shows you the extent of how much emission costs will be, how much the owner operator would have to pay at the end of the life cycle. So it is vast, and it is comparable to the fuel costs on the life cycle basis. So this is to draw the attention to to basically an urge to find the compliance mechanisms, as of today. Otherwise, these costs would amalgamate to some enormous numbers. We could see, of course, for some alternative fuels, the cost of fuel will become higher at the life cycle stage, but then you pretty much can eliminate your emission costs. And where the reality is going to be somewhere in between. You might not be able to procure these low carbon fuels at all times, so you might end up one year, paying for the compliance or entering a pool and getting some of these surpluses from elsewhere. And particularly, when we talk about some of these future fuels like synthetic fuels, there is, I think, awful lot more maturation, technical maturation and commercial maturation that we need to see on the market for these fuels to reach, the vessels as well at scale. Now, knowing what we know, that the fuel EU that does have a profound effect, what could the operators do to comply? Well, basically, know your exposure. Make the fuel selection, fuel blending, smart strategy around the selection of your engines. Pay attention on the vessel efficiency, and then continuously monitor your exposures throughout the year to make sure that you are basically compliant continuously. We've got a minute left, so I'll just go quickly through the flexibility mechanisms. This is to basically show the extent of complexity around this. And mostly what we see on the market is that larger fleets and larger owners, operators will, with greater, access to capital, will have the access to could afford basically the access to the low carbon fuels. And the risk is that the smaller players are left out of these pools and would have to struggle basically to either pay for compliance and increase their operating costs, which is not a good position to be in. And finally, what impact would this sort of regulation and also the IMO regulations, which is quite similar to the fuel EU and the ETS in that sense, how would that impact the vessel designs? And we talk about the future fuels and their uptake, but what this really means when you come to the drawing board and when you go to the shipyard, well, there is no utopia without a dystopian solution. So there has to be a compromise somewhere, and that compromise firstly comes in the reduced cargo capacity due to the larger tank size because of the energy density penalty for some of these fuels like methanol or ammonia. And also, what does that mean? That means higher unit freight costs for the vessels. New technologies, energy efficiency, I think we've talked about those. I think these we expect higher uptake of these, and these I would really encourage all the owners, operators at the beginning of the life cycle to implement those as the standard spec for the vessels. And then final risks and safety. I think these would have to be, I think some of these new fuels, they carry out new risks, toxicity, explosivity. We need to inherently basically be working on these to make sure that people and assets are safe during the energy transition. And finally, for this to happen, we need new skills. We need new skills on shore. So we need, naval architects, marine engineers, risk specialists who really understand inherently these new molecules and the new, safety protocols and these designs, and ultimately the yards. I think we know that they're struggling with capacities and they're struggling with the skilled workforce, and these sort of transitions, FuelEU or IMO, will make the things even worse. So I think this is a risk and a challenge. Well, with that, I think hopefully I've managed to explain some of the dynamics in the FuelEU, which is happening this year. So I think profound impact for the players who are not ready, who don't have the right strategy. So I think having the right strategy in place, whether that's the fuel or fuel blending, fuel strategy or pooling strategies, is quite important to avoid these hefty penalties. Flexibility mechanisms, I think, banking, borrowing, and pooling do offer some of the ways for compliance, but I think there are some risks there as well, because particularly for the pools, they are decentralized, systems. So the market participants are basically encouraged to go and create the pools themselves, which I think leaves some smaller to medium-sized, owners and operators exposed. And finally, future-proofing. Basically, the next 5 to 10 years we'll see basically a lot more on the new ship designs, hybrid electric designs, fully electric depending on the segment, and so on. So with that, thank you very much. Please check out some of our research.